good morning, everyone, and welcome to the Mind Your Business show. I am your host, Milt Walker, joined with our host, Mr. Tony Calloway, the Private Money Godfather. How you doing today, sir?
Maestro, I am doing absolutely fantastic, man. Thank you so much and happy Halloween to you and everybody out there in our viewership. We're so delighted that you make us a part of your Saturday and a very important part of your life for you to show up so you can learn how to earn and make it do what it do here at the Mind Your Business show. And hey, Maestro, what you got planned for Halloween? Trick or treat?
Uh, no, actually, got a couple of other events that I'm doing after this, but that's pretty much it. You know, all treats, no tricks. As you said in the post. See, I pay
Oh,
attention to a lot of things, but yeah. So how about yourself? What you got going on?
well, I don't know. I will say that all the Halloween candy that my wife and I bought is something I like. So if nobody shows up, I'm gonna eat it. I remember the first year I bought, I guess about 5 years ago, she wasn't there. She was keeping her granddaughter. I bought all this stuff and none of the kids showed up. It's like, and I had all this stuff I didn't like. I said, well, from now on, it's going to be Reese's Cups, Kit Kats, and
Yeah,
yeah,
I don't
man.
think they really do it like that here anymore, or really anywhere. I think they have like safe spots that they
Wait,
do it because it's not like when we were growing up. So it's a little different. So I think you got to kind of be a little more on the cautious side, a little more safer these
I would
days.
say so. But hey, for everybody out there, enjoy your Halloween, and for those who have kids and grandkids like I do, let them have some fun and enjoy that childhood thing, and of course be safe, COVID conscious. We
Definitely.
got to find the safe ways to enjoy all the festivities of life. But hey, folks, we're delighted this morning to have folks here who are the dynamic duo with Credit Cure Plus. We have Mr. So you'll know exactly which is which. We have Mr. Jermaine McCall. Raise your hand. There you go. And then we got, now you might think this is Tyrese, and when you hear him talk, you might think it's Tone Loc. Yeah, I made him smile. But hey, this is Jermond Lindsay, who is the leader of the organization Credit Cure Plus. So how you gentlemen doing this beautiful morning?
Great,
Doing
great.
great, and yourself?
Oh man, we're doing great. We're glad to have you. We were all having some fun before the show started, and I told Jermond I was going to do that, but he does got a favorite Tyrese when he smiles. So seriously. Hey, but we're going to talk about credit today, and
Mhm.
my thing is that credit is a new cash. The private money syndicate is involved with helping real estate investors and small businesses and large businesses too to get the capital that they need to grow and to power their dreams with private money. And you cannot get financing without credit. You got to have a good credit score. So we've been trying to find every angle that we can help solve the impediments that are or mitigating circumstances that keep us from moving our clients toward their dreams. And so the policy we have here at the Private Money Syndicate is only to bring the best of the best into our affiliation to be able to provide service. And here we found them. We've got Jermond and Jermaine. So I'd like for you gentlemen just to take a moment to tell a little bit of personal background. And so we'll start with Jermond first, and just a little bit where you're from, how you got into the industry and stuff. And then if you want to pass the baton over to Jermaine, because I know he's coming to the business with you, and then Jermaine, if you do the same. So gentlemen, you have the floor.
All right. Well, thank you very much. Good morning to everyone out there. A little about myself. I was born and raised Pritchard, Alabama, small town right outside of Mobile, Alabama. Like I said, born and raised there. Went to high school. Track, art was my thing. After high school, I joined the military, United States Marine Corps. Did 4 years there. First station was in Quantico, Virginia, stationed at OCS. Trained officers out there. From there, I was transferred up to Washington, D.C., the Washington Navy Yard. PEB, Physical Evaluation Board, is where I was assigned. So that's where I finished out my career between there and the Pentagon, kind of worked dual roles at that time. Once I got out, went to school, network communications and management. That's what I educated background in. From there, got a job, worked 17 years, network administration, and also did CAD work, computer aided design, kind of one of those on the job things that I picked up. And at a certain point, I was looking to make a business move, and I ran into a unique individual that kind of pointed me down this credit road. And I became intrigued with it, and everything just kind of grew from there. And 5 years later, here I am. So that's pretty much me in a nutshell.
All right. Well, thank you, Jermond. And you mentioned the Washington Navy. Of course, I was probably out before you came in, but I was at Bolin Air Force Base, stationed at the Defense Intelligence Agency. I was an intel officer. So,
okay, cool.
Your service, simplify.
I
think about adapt, was it adapt, improvise, and overcome?
That's it. Adapt and overcome.
But glad to have you with us. Glad to have you with us. All right, Jermaine, tell us where you're from and how you got here.
Well, actually, I'm from the same area. Actually, Jermond was my next door neighbor growing up. So it's just funny how we crossed paths. Everything came full circle. My background, I was actually following Mun's lead. Mun's basically, you know, an older brother to me, older brother figure anyway. And when he went to the Marines, I was right behind him. And then I ended up going to FAMU. So that experience just catapulted me into a bigger understanding of, you know, our plight as a people and how we need to work together, group economics, and some of the times that we're looking at right now. So I end up coming back from FAM, going into sales. Sales got me into banking. From banking, I just started learning credit and understanding how this financial system worked. I lived in Atlanta for about 5 years when me and Mon, we reconnected there, but I didn't get into banking until I moved where I am now, upstate New York. So New York, just this being a financial hub, I learned a whole lot, but I also learned the importance of how that conversation wasn't on the table for our people, or the information wasn't as available. So it was just great when Mon jumped into the same space. We collaborated, we started working with people, we're seeing a lot of results. So, you know, fast forward, that's where I am now, just partnering with Mun. And by trade, I'm a financial planner. So I look at the full financial picture, but we always get stuck at credit. Like credit is always that big hill to climb. And that's when I'm on the phone with Mun. So it's, you know, that's where we are.
Awesome. Awesome. Well, hey, thank you for your service to the Marines. You know, it's one thing, I say this jokingly, but it's true. I say, you ask anybody who's been in the Army or the Navy or the Air Force, why did they go in, and they give you some reason. Whenever somebody I meet, I ask them why they joined the Marines, they say, I wanted to be a Marine. That was it.
I just wanted to know who was the toughest. That's what they said. That's where I was.
Joy, because I was Marine, so that is admirable, man. That is fantastic, and so I'm glad to have you, not only for what you did, but what you're doing right now, because it's important. Now, to all of our viewers today, we're on credit. So now, one thing I want to ask you to do is for the Mind Your Business show, I want you to like, follow, and share, because we got to get up to our goal is between now and the end of the year to hit a solid $20,000. Not dollars. See, I'm always talking about 20,000 likes, and we can't do that without you. And today, with this topic, if you have questions about your credit, anybody's credit and stuff, please put those questions in early, because what happens every week, we get down to the last 10 minutes, then we got 15 questions that pop in, and there's no way we can answer them. So you know what the deal is. So go ahead and let's get those questions posted so we can hopefully handle those, have more time to respond to you. But please like, follow, and share the Mind Your Business show. And Maestro, do we have any shout outs that we can do right now as we get things underway?
Yeah, so we got Honey Renee Gunn joining us. Good morning. And yes to group economics, she says. Yes to group economics. And Versandra, Miss Versandra, part of the team, says thank you all for your service. And that's it for right now.
Okay. All right. Well, let's get into Credit Cure Plus. Now, how did the model for Credit Cure Plus come about? And Jermond, I heard you mention that somebody pointed you down this path. So let's pick up right there and talk to that, and then wherever you come into the picture, Jermaine, you can add to the story.
Okay. Yeah, as far as the business model for Credit Cure Plus, my main motivation, honestly, was to be different from everything else that was out there, you know, and not to throw any shade on your FES or any other, you know, business that repairs credit, but it was the financial side or the strain on the individual client that I wanted to eliminate. From what I saw that was going on, and it kind of depends on the severity of your report, but most individuals who needed help, they needed a lot of help. And going through those routes, it was just honestly adding an extra bill to their monthly financial plate.
Okay.
So what I did is I said, instead of addressing items kind of as you pay, my model is it's a one-time fee, address everything on that report at one time. Let's get it done, out of your way, so your credit can rise, your life can change financially. You can start receiving those benefits that you get from having good credit.
Okay.
Yeah, the whole credit, just the approach to credit, me personally, us all coming from different financial backgrounds, having financial hardships, you get to the point where you want to figure out, okay, how does this really work? Since this has been a problem, I mean, we're coming from Pritchard, is not the, most lucrative, thriving city. So that was always in our face. You always understood your position financially. So to be able to get into that and figure out how to fix that, figure out how to make that work for yourself and individuals around you, it was just, a brilliant way to go. And I personally wanted to go through the process. Even mine being a friend of mine, I definitely want to, before I refer or before I put my face, on anything, I like to make sure it works. And man, I could say his process, even right now, I'm getting texts as we're sitting here of just results of clients. Thank you. And we're just starting, we're just getting in the process. So I've seen it. I've seen them get a lot better at it. I've seen mine grow in it. And I've also learned what I thought I knew being in banking. Here I am sitting, learning from, the specialists here. And that's an effective way to go about things right now, because it's so needed. It's so needed.
Exactly. In fact, I went on you guys' Facebook page, and what I liked was seeing, I stopped scrolling after a while, all the profiles of folks. Everything was 700 plus. So, that's where you need to be. And so with that thought in mind, because we're in 2020, I told you guys a story. I grew up rural, cash always. In fact, I just thought about it. I had bought 3 cars and a house before I ever had a credit card. And like I said, nowadays they check your credit for everything. Get your light phone, buy vehicles, obviously homes. And a lot of people don't realize this, because I was in intelligence in the military, but if you got bad credits, you can't get a security clearance. So, yeah.
Exactly.
I didn't know that.
Oh, yeah.
Financial burden will put risk.
Well, we didn't want to selling information to the Russians, man.
Exactly. Financial burden.
Back when I was in the military. But what are some of the unique, because that's what you guys do now. We do finance, but credit is a component of that underwriting. But what are some of the unique challenges that you guys are seeing that some of your clients are coming to you with? And on the other side of that, the opportunities that, having excellent, and we're talking about excellent credit. What are some of the challenges and opportunities that you guys are witnessing and observing in the marketplace?
In regards to challenges, the only challenge or the main challenge I've seen, honestly, is just getting individuals to really understand what this credit is, if that makes sense. This is the way I like to explain to my clients. Your credit profile is likened to your job resume. Okay, this is your character resume to lenders. And just like on your job resume, you want to have, all your skills up there for that potential employer to hire you. Well, you want to have the same thing in your credit profile. Open, active accounts in a good status is equivalent to the skills on your resume. So if you view it that way, now it's not this mystical beast. You know what you need to do, i.e., you need to, once you look at it, if you do have any negative items on there, well, they need to be disputed out. A negative item within your credit profile is just like having a notation in your resume, hey, I'm good at this, but at lunchtime I eat somebody's food out the fridge, so you don't want that stuff in there. That's been the main thing. And I've noticed that when clients get over that hump and truly understand, it's like magic. Like they really dig in and start building these profiles, and it's the beginning of something beautiful. So I think understanding is really the main hurdle. After that comes discipline. You have some individuals who just don't have the discipline, or don't exercise it initially, but throughout the process, we work with them and get them in, get them going. Okay. But those are the main two things I've seen.
All right.
Yeah, me, I think it's just people taking the initiative and people having the vision, the belief that I can get you where you need to be, and this is not going to be a long process if you follow my lead, if you follow the steps. Because I've been a loan officer, so I've been on the other side of the spectrum. This is where you're bringing the credit to. This is who you're coming to get approved. This is what they're looking for. So just working on communicating that to the client to let them know you have to do this step first before you go for these houses, and the things that you're fancying is steps to get there. And it's realistic, it's not something that's far-fetched. We put it off, we'll get to it, or we act like it's going to go away. But like Jermond said, that's your resume. Mm-hmm. And that's basically your character on paper, regardless of how we look at it. That's just the way it is. And it's attached to more systems now.
Yes.
As we see, man, and ever increasing.
Mm-hmm. Now, from the standpoint that oftentimes, I won't say oftentimes, I'll say 1 out of 4 times I talk to somebody and they'll tell me, I don't know what my credit score is. I mean, to the extent that having been a loan officer, Jermaine, people only become concerned about their credit when they want to buy something that they have to finance versus it being somebody, let's just say somebody knows they have diabetes. They know they need to check their blood sugar every day, or sometimes more often. Talk to the point of credit management as a hygiene activity versus it being an episode that now we're at the point where that's where the time comes in. I mean, if I want to buy something now and my credit won't let me, then I'm in a hurry, versus if it's something I realize I've started off kind of behind the power curve, I can start managing so that when that time comes, the doors are wide open. So, just talk to that conceptually from the loan officer point of view.
I think it's just communicating that it's a cost to waiting, like the longer we wait to address this, I've been in that, and being that I've been in that space of having bad credit, I can identify with the client. I know what it's like to not even want to see it. I don't even want to pull it up. I don't even want to know, like it's going to go away magically, or I'm just going to, like, it's a gamble that I'm playing, putting this loan in. Maybe they'll get it to me, maybe they won't. You're not knowing what the parameters are, so once you explain that to people, and they just start taking the steps and understanding, and really just pulling the report and just reviewing it with them and like letting them know this can be done, that opens them up to, more understanding. And then, like I said, knowing the underwriting side of it, I'll let you know what we're going to look for before you even waste your time, So a lot of times I try to get you ready in a way where we know it's going through. We know this is not going to be a wasted inquiry or anything like that. So, just that confidence, I think, is and having a partner in that is the biggest thing.
Gotcha. Just kind of like your doctor is your partner in your healthcare. Having somebody in your space is a great partner. Now, Jermond, let me ask you a different but related question. What percentage of credit reports have clearly erroneous information in them? And we were joking before the show, and y'all out there in the viewership, you can laugh with me on this, but we hear about folks having, they come to discover that their mama had the lights in their name and all kind of stuff like that. All these kind of things that might be relevant to our culture. But from the standpoint, there are mistakes on credit reports. So what percentage would you say have some errors that need to be off? And then, you can talk into the opportunity to actually get things removed that are holding people's scores down.
Well, I can only base that on what the clients tell me.
Right.
But yeah, I would definitely say anywhere from maybe 65 to 70%. There are errors in there. The system is not perfect. It's just not, and that's just the nature of the beast. So that is roughly the number, around 65 to 70% of clients have errors within their credit profiles.
Yeah, and I know that I had one on mine, and I'm like, what is this? And obviously, I got it off. But being able to have access and routinely monitoring your credit, there are a lot of tools and systems. Oftentimes, I know USAA as insurance policy, and some credit cards give you this, and it doesn't show all three unless you pay something extra. But at least I have some basis for that. Now, how about talking about inquiries? We hear this a lot of times. I think there's reason for understanding and being cautionary, but then I think sometimes people, oh no, I don't want no inquiries. You know, there's some fact and there's some fiction on the inquiry. So, get the record straight. When does it hurt you, and when is it a non-event in terms of inquiries? And you can include in that soft pull versus hard pull. Some of those terms that people may hear may not be clear on. So, whichever of you want to address that.
Okay, I'll take that one. As far as inquiries go, okay, inquiries that do not hurt you are the inquiries that are associated with accounts that you have, i.e., that's the natural progression of acquiring credit. You go solicit, you inquire, and then you obtain the account, i.e., if your credit is worthy. Now, the ones that hurt you are the ones that when you go and solicit for the account and you do not get it because your credit is not worthy. Those are the inquiries that hurt you. Okay. And as far as the hard pulls and soft pulls, anytime you go to a lender or you're going out somewhere else and you're actively looking or seeking credit, that is considered a hard pull, which will be reported on your credit report. Anytime you check your own credit, i.e. through, any of these credit monitoring service, you could check it 100 times a day. And that's a soft pull. It will not affect your credit at all.
Mm-hmm. Okay. All right. And what about the numbers of inquiries, we'll call it pools, within certain windows of time that lenders look at that? There's some measurement or maybe even the FICO algorithm reduces your credit score because of inquiries. What's the math? What's the timeline on those kinds of things? Or is that fictional too?
One thing I learned from you recently, Mon, was positive inquiries versus negative inquiries. So I want you to touch on that as far as the things you get approved for versus the things that you applied for and weren't approved, and how,
Yeah, that's kind of what I was just spoke on. And Tony, once again, could you repeat that question really quick?
Okay, sure. Let's just say that somebody has X number of inquiries in a certain window of time that pulls their credit score down. So is it I'm making up a number. If you have 3 inquiries within 6 months, that doesn't hurt you, but if you hit number 4, you lose points on your credit score. I mean, is that fact? Is that fiction?
What I know is that it's a 2-year window for inquiries, okay? Whether good or bad. 2-year window. After 2 years, whether good or bad, they should be purged from your profile. A lot of times they aren't, That's some of the inaccuracies that we spoke about earlier. How can I put this best way? And I'm kind of just at a loss for words right now. I'm trying to think of the best way to put this in regards. There is no, from my knowledge, an algorithm or anything that says that, if you get this many inquiries in this set amount of time, it's going to affect you this way. But from what I do know is that the 24-month time frame, you have your hard pulls, which are your inquiries. The ones that are associated to accounts that you have, of course, they do not affect you negatively. The ones that are not associated, they do, roughly 2 to 5 points apiece. But all that is dependent upon the makeup of your profile. You got to understand that the scoring model in which that 3-digit FICO score comes from is it takes information from all those accounts for balances, utilization, history, age, all that is fed into that scoring model. So when you have so many differences calculated in, of course, the inquiry over here on this individual may have a different weight from the inquiry for this individual. So it's very, very personal. They're like fingerprints. No two are the same. So it's kind of hard to say a general, when everything is so unique.
Okay.
I hope I answered your question.
Well, you addressed it, and I think there's one piece of information you gave earlier that help me to understand
Okay.
why it was difficult to answer the second question, because as you said, it's the inquiries that you get declined for that hurt you, and versus the ones that you get approved for that do not.
Yeah, they should be there. They
Yeah.
absolutely should be there, and they don't hurt you because they're attached to the account that you got.
And so oftentimes, because I'm sure you've heard people say, I don't want an inquiry on my credit profile.
Yeah.
That's why I asked the question about the window, but it's not as much the time frame as it's the outcome. So to the point that being able to look at your credit history, have some assessment of where you stand relative to, and I'll bring this back into what it is we do, having some indications to whether or not we'll be able to get that approved, obviously would be judicious before you go into it, because you do have opportunities to actually pull your credit history from some of these sources like creditchecktotal.com.
Exactly.
I mean, there's so many of them.
And they're soft pull and they won't hurt you. So.
They don't hurt you. Yeah. Now you might pay $1 or something like that, but yeah. I mean, I think that the juice there is well worth the squeeze. So I want to turn to the maestro if he might have a personal question or a question from any of our viewers that he wants to throw with these experts and see what insights we can gain from that.
Yeah, let's check our audience, see what's going on. Miss Tamara Chandler is checking in, said good morning, everyone. Miss Angela Blackberry Streeter, Washington, says good morning as well.
Morning,
Ronnie Pollard says good day, fellas.
What's up, cuz?
Right.
Luana Hayes is joining us again, says good morning, everyone.
Always present.
Nikki Johnson, of course, is joining us, says good morning, everybody. And Siobhan Andrews has a question, says, since COVID, is the process of removing inquiries taking longer than 45 days? And then also Ryan Calloway says good morning, but if you want to answer that question.
Sure, it has been 45 to 60 days since the COVID outbreak, and just due to manpower shortages. And that's from my understanding, you know, of communicating with a couple of people at the bureaus that I could communicate with. But yes, it is taking a little longer doing this, you know, pandemic right now.
Mm-hmm. Okay. All right. Well, that was really good. Some good insights. Now, I want to take an opportunity to talk about business and real estate financing, because for all of you viewers, the Private Money Syndicate is focused on helping to finance real estate investors and small businesses. And one of the things that we do that is one of our hallmarks is help to develop credit lines for these clients. You know, whether you're a small business person, you know, everybody needs to have a credit line. You know, I would say $100,000 for business and real estate investors, $50,000 to $100,000. Now, in order to do that, oftentimes, based on some other mitigating factors, you really need to be looking at a 700 credit score or better. Now, from the standpoint that if you've got that level of credit and you get the credit line, that property that you needed $25,000 to make a down payment with, well, guess what? You got it, because we can finance the rest of the deal if the deal makes sense. If you're a small business person and you need to cover payroll, or you have some hiccup in circumstance, you have a contract that you want to take down, but they're not going to start paying for 60 days, well, then you can go ahead and take that opportunity because you have access to credit. And some of these credit lines we're able to have zero interest for 6 months, 12 months. You know, if you qualify, and guess what? A 700 plus credit score will probably get you there. So let me go to our experts here, because this is where the team, they become, they're like the MVP. All right, because if they help you to get your profile right, as far as a personal credit profile, and that's where most people start with before they develop business credit, that puts you in the game. So from the standpoint of Jermaine and Jermond, what are some of the techniques and tactics that Credit Cure Plus is able to provide, along with the education and understanding that help to rapidly, and if the window now is 45 to 60 days, if that's as fast as it can move, that's as fast as it can move. But if you got the accelerants that you guys can apply, share that, because that's the magic reason why you guys are here with us.
Well, we'll go ahead.
Okay. All right. Yeah. In regards to the credit and everything, and I'm sorry, I got distracted with the call. Jermaine, I'm sorry, if you could just
I got really
quick. Yeah.
Well, business, well, personally, being that I've gotten business funding from fixing my credit. Like I said, I like to go through the process before I offer any advice, just to see how it works, And having business funding, having that cushion during COVID, having that no interest, not having to worry about these things, but understanding what it took them to get that in place and the time, like I said, the cost of waiting. So a lot of people that got started maybe before COVID were almost ready during COVID to receive that funding. But one thing that I've talked to a lot of my business owners about is, just the long range, the plan itself, like who are you going to get the lending? What are they looking for? So even in instances where you open that business account, and we were talking about inquiries a minute ago, and they pull your credit. Well, they're going to pull your credit when you open the account anyway. So you may as well maximize that credit pull and see, okay, well, let's put in the application for this loan or that loan. You're still dealing with the same inquiry because the credit union or whoever you apply to, they won't pull it twice because they've already pulled it to open your credit.
That's
so
yeah.
So in that instance, you'll find out what the underwriters are looking for, what the loan officers, what's that threshold? Is your DTI too much? Things of that nature. Debt to income ratio is what I'm referring to, for those who don't understand the abbreviations. But I believe that has helped me really guarantee, streamline the process in a sense. Knowing where you're going, knowing how much you need to get funded, knowing what that profile needs to look like, and knowing, possibly who you're going to get that done.
Right.
Well, I say start dropping those seeds earlier, getting those accounts open, learning what they're looking for, and then we can build up from there.
Okay. All right. Very good. Thank you, sir. You want to add to that, Jermond, or do you think he covered it all?
Yeah, sorry about that, but just wanted to talk a little bit about the service. It actually offers an alternative to bankruptcy and debt consolidation. And I want, I just want individuals to know that. A lot of these accounts that are in your profile that are in there inaccurately, they can be removed, and along with them being removed, the debt associated with it can also be removed. All right. That's just one of the main things I kind of wanted to touch and add in on that.
Okay. All right. Well, obviously, Credit Cure. I like the name. It's Credit Cure.
Credit Cure, sir.
This ain't treatment. This is cure.
Yes, sir. It's a tag team effort.
and I want to share some with everybody on that word. I actually had a client back when I was in financial services. She was a clinical physician, and they would do clinical trials. And she was saying they would do these efficacy tests, like they would start with certain dosages and see when something started happening, and then when it actually remedied the ailment, and then ultimately keep going out to. And whenever you hear these ads for certain medicines and stuff like that, and you hear all the warnings, that's because some of those things happen during the clinical trial, like somebody may have died. They got to throw that out there. But she said, I'll give you an example, if 6, 7, and 8 milligrams of something treated the condition and made the ailment go away, but 9 cured it, there's no profit in cure for the medical industry. Those 6, 7, and 8, the way it treats it, but it never gets cured. So you guys aren't treating credit, you're curing credit. So that is the ultimate efficacy right there. So I think the name says it all. And I want to point out to everybody that we have Jermaine here, who has been a loan officer. So to the extent that when people come to the Private Money Syndicate and we do our initial screening, just for those who will and those who have, we want to understand what is your situation so we can identify mitigating circumstances. One thing he mentioned is debt to income. Now you could have an 850 credit score, and every dollar you have coming in is going out on other obligations. You can't qualify for another dollar of obligation. That's a mitigating circumstance. Maybe time in business is a mitigating circumstance. Maybe your credit score is a mitigating circumstance. All of these things are part of your biology as far as your credit condition. And all of those things can be improved, or we can find a lender who can serve your situation. Or if you're not quite there, the one that's closest that if you can bridge that gap, and maybe credit is that gap you need to bridge to be able to get to that lender. That's why we screen before we pull credit, before we do anything, because we know what's on the other side of the scenario. So to the extent that bringing experts into relationship with you through this process we have here at the Private Money Syndicate, working with experts like Credit Cure Plus, Jermond and Jermaine, who have their acumen, their background, this is a holistic situation that is going to help you to get where you want to go to power your dreams with private money. Now, I want to go back to the maestro. I see him looking at the screen. I don't know if we got any new folks in there, any questions, but we certainly want to entertain them. And so what's happening there?
Yeah, we got a question. Miss Honey Renee Gunn says, can you talk about debt to income ratio and how that impacts your credit? So they want you to expound a little bit more on the debt to income ratio that you guys had brought up a little bit.
Okay. Well, the debt it really it identifies your risk to the lender, and it correlates with the credit score itself. You know, so the higher the score, the more debt they'll allow. You know, because you've already shown that you can maintain. You know, apparently with your score being high, you've shown that you maintain credit okay. So they let a little bit higher of a threshold of debt. So your debt to income is your debt, literally your debt versus your income coming in. You know, and if the debt is higher than the income, way higher than the income, then a lot of times they look at it like, why would we put more debt on you? You're barely handling what you have. It's logical when you think about it. So in some cases, when you're getting ready to go for funding, you want to make sure you offset the debts that they look for, and everything doesn't show up. It's a lot of your monthly, you know, loans, car loans, mortgages, credit card payments. So it's not, you know, your light bill or all of these things that you may factor in, but you do want to factor them in yourself and be real with your situation. Because one thing is you want to set yourself up for the win and not just, let me just get past getting the loan and I'll figure it out later. Think long term of how am I going to maintain this? When am I going to be in profit? So when I sit down with a business owner, because I know that's who we were really keying in on, I like to know what your vision is and how are you tracking the scale up, you know, and what does that need to look like for you? How much time do we have? Because if we have more time, of course, we can, you know, take our time and do this properly to get you funded in the maximum way, you know, or for the most that one time. We don't have to keep doubling back and, you know, things of that nature. So,
Okay,
yeah.
and then we got another one.
Oh,
It says, Miss Angela Blackberry Street of Washington says, you may have discussed this, but when you want to start a business, but it's told that you don't have enough credit, but the income, the savings, financial stability is there, where do you start? I think you kind of started getting into that a little bit. So if you can just expound on that a little bit more.
That sounds like more of a bill. So I'm gonna let Mun actually take on that because he's literally put profiles together for me. I bring clients to Mun, and it's, I mean, from family members to getting them from zero to in the homes they want to be in, to getting them from zero to fundable for businesses to get started and things of that nature. So the bill process, I'll let Jermaine take that on.
Yes, and the bill kind of just depends on where your profile is at the time. You know, average profile, most lenders that I've dealt with and just talking to them, you know, they like to see, you know, a minimum of 8 open active accounts, because you can have a score. Understand, your score and your purchase power is 2 totally different things. Okay, I can take an individual with no credit, add them on to a single credit card, and they could be easily 740, 750. But their resume does not instill enough confidence in the lender to lend them money, i.e. going to purchase a car. So guess what? They'll still need a cosigner with that 750, if that's understandable. So those are 2 totally different things. So you definitely want to build the profile out. And that is something that I do with my clients. I have accounts on several different levels that I recommend, from individuals who, when they first start and the score is super low, when I'm doing my work as far as getting the negatives out of their profile, and they add accounts to the profile to build. So the timing works kind of, you know, in sync. And then I have accounts that I recommend for individuals who have better scores, you know, like unsecured lines of credit that they can go and get to build their profile. But at the end of the day, you have to look at it as if this is your resume. And just like your resume, you want to pack that page full of skill sets for that potential employer. Well, the same thing. You want to have open, active accounts in good standings without late payments. Late payments are the worst thing that you can do to your profile, honestly, because it's a 24-to-1 skew. Please understand that. 1 30-day late, as the way the system is set up, it takes 24 months, 2 years to compensate for that. All right. Please understand that this system is not set up for us, the consumers. And this is just my opinion, but it's one thing: stimulate the economy to keep more people buying items and services for more than they're worth. Simple as that.
That I would agree with, unless you're doing it for business purposes. And business, and that was a very valid point, you know, and I talk to clients oftentimes about the difference between credit as a consumer and credit as business.
Yeah,
and,
it is two different things.
I'd done an article, it's probably pushed a year ago, and to get to the point that's relevant here, I said, now Apple has billions of dollars in cash, but they also have billions of dollars in credit. But why? Okay, I said, so if just that is a premise, you need to understand as a business person, you are handicapping yourself if you don't have credit lines, if you don't have access to credit. Now, in terms of Ms. Washington's question, there are some functional differences between bank and traditional lending and private lending. I'll typify it saying that the credit score is important with the business lending. Now, business lending often doesn't show up against your personal FICO score. It reports your tax ID number. But one of the things that most or oftentimes business lenders look at is they also look at your banking activity. That's why brothers and sisters run the money through the business, because when they look at your bank statements, and let's just say that you want to get $50,000, they say at the end of the month you're carrying $2,000 positive balance from month to month. They look at 6 months of bank statements. Every month you got $2,000 to $3,000 that you're flowing from one month to the next. They know if you take on this loan, even though your intention is to make money with it, the payment's going to be $500, and they see where you could make that payment. Common sense stuff. If I was going to loan Jermaine some money and I said, let me see your bank statement, the payment is $100, and every month I see you got $2 left, how's he going to pay me $100? Exactly. Now, same thing if they look at your bank statements and you might have made the money, but if you don't put it in the bank, it can't show up. And they're going to say, oh, you got $5 left over, but you want to make a $500 payment. You got an 850 credit score? No. Yeah. Okay. So all these things are tied together, but to the point that as you talk about building that profile, we've also part of working with us to help you to understand all those other things, that we have the resources to help package it. I call those mitigating circumstances. So if not immediately, within a short period of time, you can be positioned to get that real estate investment, to get that business funded, to do what it is that your heart and desires are from a business point of view. Now that's what we do together here at the Private Money Syndicate. Maestro from the control room, any other questions or shout outs over there?
Yeah, we do. Ms. LaWanna Hayes says, what's your opinion on parents trying to establish good credit for their children by adding them to their credit cards as additional card holders or as co-owners on property? What's your opinion on that?
All right. As far as adding them to the credit card, I think that is an awesome idea, but you have to be very careful. Understand that as an authorized user, when you add somebody on as an authorized user, everything good and bad will be transported into the other profile. So I would recommend, if you do that, make sure that the card history and the payment history on that card is flawless. That way you will be importing good credit history, to your child. You don't want to import negative credit history. But yes, it's an awesome idea. I highly recommend, if you have, accounts that you are able to do that, definitely do it. Give them a head start.
Yeah, and as far as putting them on, I think she was saying a mortgage, right?
Co-owners on property.
Co-owners on the property. Well, I guess that's, you want to know the long-term vision, for your child. Are they, would that take them out of being a first-time homeowner? You know, would they looking to utilize that later? Can they leverage that in a different way? So you just have to think long term, as far as, you know, the behaviors that may change with the child, the intentions of.
No, no, not at this time.
I know this advice, but you know,
I've given, you know, skills and tidbits to individuals, but once they really understand what this is, that's like the opening of the door. That's like the sunshine coming in, and then from there, everything else makes sense. So if I could impart anything, number one would just be really get a true good understanding of what the credit report is, which is what I tried to kind of explain a little earlier. You know, this is your character resume, and just like you build your regular resume, structural wise, you want to do the same. Um, Another thing that I like to impart is on individuals how to understand on a very simplistic level how your FICO score moves, you know. And the way I explain it to my clients is kind of like this. Imagine that your FICO score is like an old pirate ship, okay? And your open active account, those are the sales that catch the wind and, you know, send the score moving. All right, negative accounts from collections to old charge-offs, unassigned inquiries, bankruptcies, all those are like anchors. They hold it down. Now you have a third element, which are like open accounts that you have, but with late payments. That's like having a sale with a huge rip on it. Okay, it's not really catching wind, but it's still there functionally. So, you know, that combined with the first way a lot of people really understand what's going on, i.e., simple move. You have to cut the anchors, increase the sales. Score grows fast. Simple as that. You know. And the third thing I would like individuals to understand, once again, this is personal credit, but credit cards are your friends. Please do not be afraid of credit cards. You know, it all boils down to your discipline. But the way that these accounts are scored, first of all, you have installment and revolving accounts. Those are the two types of credit. Okay. Um, and then this is the thing. Revolving accounts, once they're established, as long as you don't close it or the actual credit grantor doesn't close it, those accounts stay open and gain age. The older an account gets, the stronger it is. Okay. Installment accounts, that's like people ask me, like, you know, hey, I just paid my car off and my score went down. What happened? You know, I didn't miss a payment. That's absolutely correct. But open accounts hold more weight than closed accounts. So when that installment account closed, yes, your score will drop. That's the way the system is designed. So revolving accounts or credit card accounts, I just want individuals to understand that they are your friend, you know, as long as you manage them well. no late payments, they will definitely help build your credit. So I guess those are the three things I would like to pass on.
Well, that is awesome, because I did not know that when you pay off an obligation, that actually would cause your score to drop.
Yeah, it will drop a little bit because open accounts hold more weight than closed accounts. Lenders like to see what you're actively doing now, and that's the way the model is designed to rate it. So yes.
Very insightful. How about you, Jermaine? What would you like to add?
Mine is pretty straightforward. I mean, I actually concur with a lot of what Jermond just said, but my main thing is patience. Just having patience with yourself, where you are and where you're looking to go. So that'll be the first thing. The second thing is just, being engaged and positively engaged, in that process, because, I found some people have more luck based on their outlook. Some things I may have think, me looking at the profiles that I have now, things that were supposed to take 45 days, some people it comes off in 2-3 weeks. Of course, we're not going to promise these things because we want to be realistic, worst case scenario. But just me looking at certain clients and how positively engaged they are in their vision for what they're doing, because that's one thing. We could be trying to fix a lot for you, and you just don't have the mindset, or it's going to go exactly how you think it's going to go. Regardless of what we do. And the last part is just be committed. Like be as committed with your long-term goals. As the person that's helping you get there is. We don't want to really be more committed than you are. Understand the times we in, be okay with education, and just following the lead and letting the experts be the experts. I don't try to do Jermond's job or dive too deep into it. I follow this lead. I've learned a lot. I just learned some new stuff today, even with us talking now. So, you never know it all. You never have it all. So just be committed to the process, because I definitely, that's another thing I can say with this. I haven't seen us not be able to do, fix a profile. In a time frame, that may be a thing. It may take a little longer for some than others, but we work to get it done. And I've seen so much done, so I'm just extremely confident as far as what we can do. And consultations are free. This was just one. I'm sure you guys, I hope you had a pen, pad, writing some of this stuff down. So let's have a conversation. That's about all I can say.
Wow. Well, those are very important points. And one thing that I'm impressed is that you guys are so passionate about this. I mean, there are, the world is replete with people who make claims, and obviously I would trust that most of those are valid, that they can repair credit, but actually to interact with somebody who's not just doing it as a side hustle or dabbling, but you guys are pros, you're experts. And again, to our viewers, that's why they're a part of the consultation team here for the Private Money Syndicate. They're Godfather approved. I don't just put my stamp of approval on anybody. You see, if you need, hey, look, if you need to get your technology right, you need to contact the maestro right there.
Man.
And now here's another thing I will say to everybody, and this is in no way a counterpoint to what I just said, as a compliment to you guys. When if they're not the best of the best, they ain't gonna be staying on the, they're gonna go to the bench, and then they're gonna be off the team. Because I want the best for the best, and our people deserve to have the best. So I'm very proud of Jermaine. I'm very proud of Jermond in terms of what it is they do, and they care. And what you got to do, to Jermaine's point, is you got to care as much as they do, because like I said, you have to maintain the credit after they help you to repair it. You can't just take it out on a dirt road and abuse it. Like you would.
You'll be back, and we'll charge you for the new stuff. We won't charge you for what we start with.
Hey, it's got that old Fram oil commercial. You can pay me now, you can pay me later. Don't pay twice. So if you are able to avail their services and get everything together so that you can come through the Private Money Syndicate and get the financing to power your dreams with private money, that's what we want to happen. That's why we have them on the show. That's why they're in business. That's why we're in business, because all we do is facilitate dreams. And as I tell my associates, my affiliates, I said, there's never been a loan application that didn't have a dream attached to it. So if your credit is in the way of you living and experiencing those things that bring meaning and joy to your life, please don't try to do it yourself. I read something just last week, and I've said it 10 times since then. It was one of these little pictures that pops up on Facebook. It says professionals hire professionals.
Yes.
You know,
That's the truth.
yeah, and I said that's profound. So here we have professionals who can work with you at Credit Cure Plus to get your credit score into the 700s, where the key unlocks just about every door that would be pertinent to that. So we got just a few minutes left. So if one of you or both of you real quick, you got 2 minutes to give us your 2-minute commercial for Credit Cure Plus, and then we're going to call it a day. So the floor is yours. Credit Cure Plus.
Go ahead, brother.
All right. The process is simple. You know, any individual who would like to, you know, just have a consultation, feel free to give me a call. Number is 770-685-0581. Give me a call and we will go through your credit report, top to bottom. At the end of the consultation, map out a plan for you, let you know all the positive, negatives, everything that needs to get done, educate you as much as possible. And at the end of the consultation, it'll literally be on you to let us know if you're ready or if you want to rock and roll or not.
All right.
Simple as that.
Well, you got about a minute and a half left, Jermaine.
There's no way around this. So I hope everyone understands, again, the sense of urgency and the time that we're in and the need for us to work collaboratively like this. You know, the energy is really in a good space right now. I think we all see the importance after what we've been through of not being prepared. So, you know, hopefully phones will be off the hook and people will be taking action, because the reason we're passionate about this is because this is what we're looking at. There's no way to escape fixing this problem.
Exactly.
So we're all attached, brother.
Really not. And it's a grassroots problem. And just my opinion, you know, I want to attack it from a grassroots standards. You know, my goal is to help any individual who wants to better their credit to achieve whatever they want to achieve financially. I'm here. Simple as that, you know.
So possible.
I enjoy doing what I do. I enjoy my clients benefiting, you know. Just the text I get, I'm so thankful. I never thought I would get this house. You know, it just makes you feel good, makes you want to do more. And my goal is to do as much as I can while I can.
Fantastic. Well, man, we're going to keep you all busy. Folks, Credit Cure, let me say I say it properly, Credit Cure Plus. We have Jermond Lindsay and we have Jermaine McCall, the team that is part of our consulting group. And so we're going to get ready to wrap things up. I want to thank the maestro from the control center with that beautiful logo behind him, Milwaukee. If you need to get the technology right, reach out to Silver Lining Consulting. He'll treat you to the best. And as a matter of fact, if you go to privatemoneysyndicate.com, schedule a consultation. If you didn't catch the number from Jermond, we'll put you in contact and they'll have something special for you from the Godfather, just for you bringing it this way, because, you know, we want to help you to get the real estate investment. We want to help you to get into business. We ask that you like, follow, and share this like crazy. Everybody in your contacts, because they need to get their credit right too, coming out of 2020, going to 2021. So with that, I want to tell you and I remind you that if you're going to go into business and stay in business, you've got to mind your business. Thank you for making this part of your Saturday in life. I want to turn it over to the maestro. Thank you to my guest, and maestro, take us on home.
All right, and I just want to thank everybody for joining us. Thank you for your continued support. Make sure you share, like, follow on all the platforms. And again, thank you for spending some time on your Saturday with us. And thank you both for joining us as well. And we'll see y'all on the next one. All right, take care.